Okay.
Hi, I'm Cathie Mahon, and I'm the President and CEO of Inclusiv. And I'm joined today by Tim Chen, the CEO and founder of NerdWallet. Hi, Tim.
Hey, Kathy. Yeah, it's great to chat today.
I'm looking forward to it. Tim, tell us a little bit about NerdWallet and what made you start this really interesting and innovative social enterprise.
Yeah, sure. NerdWallet democratizes finance for consumers. We try to make things easy to understand and easy to access. If you have a money question, if you're looking for a financial product, you can see it all in one place. And it really started off as a spreadsheet. My sister asked me which credit card was best for her, and so I went through and put them all in a spreadsheet and sent it over to her, and she found it really helpful. But yeah, I think the thing that that process highlighted to me is just how much time and effort it takes to get all the information in one place. So put it up on the internet and made it available to everyone.
So incredibly helpful because there's so much, I feel like as consumers, we're all bombarded with so much information sometimes that it's really hard to know. And marketers are really good at, making things sound so good for you. And especially when it comes to financial products and services, I think we've all learned there can be some really good ways to use credit and use financial products and services. And then there can be some really challenging products out there. And so it's really important for consumers to have that. How do consumers on the site tend to, what do they tend to look at the most, do you think? What are they most interested in?
Sometimes yeah, it's often, I think your financial decisions are often driven by life. So you have a kid, you need a house and a minivan and maybe life insurance, or a pandemic happens, you need to understand all your options with, what the federal government's doing, or with interest rates moving, like what should I be doing, right? So it's life that happens, and finance is kind of on the tail end of that. So we see ebbs and flows over time of people looking for different things, but yeah, the usual suspects are things like, how do I get access to lending that helps me meet goals? It could be very small dollar lending, it could be lending. How do I insure my life? How do I, or if I have excess money, how do I put it somewhere and get a return on it? So those are the big buckets.
Wow, yeah, I can imagine. And it is really according to the life stages, right?
Right.
How have you seen, just since you started in 2009 with NerdWallet, how have you seen kind of the different types of products and services evolve in the financial services industry since that time?
Yeah, I mean, I'd be curious what you're seeing too, but I'd observe there's maybe three vectors of innovation that I've seen. I mean, the first is really around underwriting. So can we broaden the group of people we lend to by looking at new data sets? I mean, I see some companies trying to integrate foreign credit scoring with the US credit scoring to open up lending to qualified immigrants. I see some companies trying to look at your checking account cash flows to expand underwriting to a group of people that may not have credit history, right? You see innovations at peer-to-peer lenders, buy now, pay later, people trying to figure out how to extend you a paycheck 2 days early based on mobile phone data or things like that. So there's a lot of great innovation there that I think is helping. And then, yeah, I think the second one is maybe around bringing power to the people. So you've got us, you've got people opening up free credit score services. Yeah, like 10 years ago, you couldn't really get your credit report for free, right? And that's really making things more accessible. And then, yeah, maybe a third bucket is just taking a lot of the costs out of the bricks and mortar and logistics required to do things like checking accounts, moving money around, brokerage services. So I think having no branches makes things, expands banking services to a lot more people. You see neobanks, you see mobile payments, et cetera. But yeah, what is top of mind for you?
Well, certainly, I think, yeah, that shift to digital banking. I know we're seeing that a lot in the credit union space. And, particularly with community development credit unions, we've always been sort of on the forefront of trying to, reach deeper into our communities and find folks, reach out to folks who just haven't been well served by, the financial services industry, or maybe their communities have been historically redlined, like, African American communities all over the country that were, historically left out and excluded from opportunities in the financial system. So I think, that we've always sort of worked through, this need and opportunity to kind of reach out to people who aren't served. And some of the innovation around digital banking, being able to open accounts more easily, remotely, using different types of data sources to be able to kind of meet some of those customer identification requirements. That's really enabling mission-driven lenders like ours, like our members, our network of institutions, to be able to reach and serve people who weren't otherwise being well served.
Yeah, it's fantastic to see.
Yeah, yeah. And in the Inclusive network, we have about 350 355 now community development credit unions, and they're in 46 states, DC and Puerto Rico. And I would say, more and more they are kind of adopting a lot more, digital and mobile banking tools, which has been hugely important during the past year when reaching, when the in-person service has been so challenged. And while our network has stayed open and, their operations, they remain kind of serving in person as needed, the more that they could shift people to remote access, the better, the more safe everybody was, right? So
Right.
I'd love to, you all have had a big transformation in the past year in really sort of, it seems like in this moment of, looking at folks who are hardest hit by the pandemic and the economic fallout. And you can really see in so much of what NerdWallet has been doing, you've really been increasing your focus on supporting low-income consumers. What's driven that? And what have you seen as you've been doing that? What have been some of the challenges and opportunities that you've seen?
Yeah, I think it's we really react to things, for example, like the Paycheck Protection Program. It became quite difficult for small businesses to really understand their options and quickly apply for these loans. So that required quite a bit of agility on our side to react and provide those resources for people. The same with content, understanding pandemic unemployment assistance and the various other programs that might be relevant to them. And yeah, I think we saw another huge surge in even things like mortgage refinancing with monetary policy driving much lower interest rates. It became a big opportunity for a lot of people to maybe get a little bit more left at the end of every month by refinancing. So we saw a huge surge there. So we're just trying to meet people where they are and where life takes the economy and takes them.
And in this time of such, financial insecurity and instability, having a trusted source like you all, I'm sure, is really critical for so many consumers.
Yeah, we hope so. We hope so.
Let's talk a little bit about NerdWallet's Economic Impact Fund and some of the work that you're doing with your corporate social responsibility efforts. Tell me a little bit about what inspired that and what role you see for community development credit unions and even inclusive in that.
Yeah, I think we're a very mission-driven company, and hey, if there's an opportunity to take some things that we're good at and team up with an organization like Inclusive and really see a win-win there, that's fantastic. I think our bread and butter is really reaching a lot of people. Maybe in the case of our partnership, reaching treasurers and financial folks within companies with large amounts of cash. And then the second piece of that is just informing them of the opportunities out there. I think a lot of them probably just aren't aware that they have an opportunity to make those deposits work harder for social impact in a way that's delightful for society, but for their employees as well, and still gets them competitive rates. So, gosh, it seemed like something we were compelled to do and compelled to invest in as a company.
Yeah, and that deposit sort of initiative, as a way of sort of additional background, we're teaming up, and NerdWallet is going to be working with Inclusive to do outreach into a wide cross section of the investor community, to help them better both understand, I guess, community development credit unions, who we are, what we do, but also be able to think about, find a way to place deposits through this really neat new social impact deposit platform. And do you think it would make sense for me to take a minute and just sort of describe how that deposit platform is going to work?
Absolutely. Yeah.
Oh, good. So we basically have or have worked through with a partner in the credit union industry, kind of the powering of a deposit platform that would enable a large investor to come in and say they wanted to make a commitment tomorrow to put, $5 million into community development and minority, Black-owned credit unions all around the country. They could place that $5 million worth of deposits on this platform. And through this platform, we can kind of shave that down into 20 different deposits of $250,000 each. So that $250,000 deposit is a fully insured deposit. It's fully insured by the federal government, just like your deposits would be in any banking institution. And so you can make that $5 million deposit sort of almost instantaneously go out to institutions on the ground that need that capital for lending. And so that $5 million becomes 20 different deposits, and each one of those credit unions receiving the deposit can go out and start doing more lending in their community.
I think one question for you there, it seems to me the 350 members have just unique understanding and access to local communities, and entrepreneurs or individuals deserving and worthy of lending. And if you could talk a little bit more about that, I mean, that'd be really helpful.
Yes, absolutely. So, community development credit unions, they are credit unions. They are, and a credit union is a financial cooperative that is sort of organized or chartered to serve specific communities. In the case of community development credit unions, and all credit unions, they're financial cooperatives. So everybody who joins a credit union, you become a member of that credit union. When you place your deposits there, those are called shares, and you become a shareholder in that cooperative. So as a shareholder, you can elect the board of directors, and you can help to sort of govern that institution. So credit unions overall are really cool institutions in that not only is the money that's earned by the credit union always recycling within that community, but also it's about empowerment and leadership within that community. You elect the board of directors who leads the organization. And that's true for all credit unions. Community development credit unions focus specifically on promoting financial inclusion and furthering a community development mission. So they are credit unions generally organized by, of, and for low-income people and communities. And they have that primary mission of using the capital of the credit union to go back out to capitalize their communities. They can be super small. Some of our members can be, a couple $100,000 of assets, and they're sort of a small group that kind of is using that money to make emergency loans available for folks who need it. They can go from very small to very large. We have some members now that are over $10 billion in assets and serve multiple counties and communities. But they all share that same kind of primary mission of using the credit union to recycle capital into communities that are otherwise underserved. And they're, and that recycling of capital, it can be, like I said, anything from a really small kind of, emergency loan that helps people stay out of the payday lender lines, right? Or it could be all the way up to a mortgage or a small business loan. In fact, you talked about the Paycheck Protection Program. We had at the beginning of the pandemic, I would say maybe 15 to 20% of our members were SBA approved lenders. And now I want to say, because of Paycheck Protection Program, because of the need of small and micro businesses in the communities where our members are and are serving, we ended up having now, I think as many as 50 or 60% of our members became active lenders of paycheck protection in the Paycheck Protection Program, getting capital out to minority businesses that just were not getting funded any other way. I think in all, the network originated like $1.75 billion of PPP loans, and the average loan size was under $50,000. So, it was truly, that kind of is an example of what it means to have this network of really grassroots organizations on the ground and serving communities.
Oh, that's really impactful. That's fantastic.
Yeah, it was a big year. I mean, and certainly something that was very, very needed. I'd love to talk a little bit about, sort of I guess, in going back into the, to the deposit platform. I know you're all going to be, we're going to be working together on this partnership to really help make this known, make both this movement known to investors, as well as helping them to see and be able to utilize this really easy deposit platform. What do you think some of the biggest challenges we're going to have will be as we're trying to tell more about what we're doing to the investor community?
Yeah, I mean, I think, well, one is reach. I mean, reach tends to get very expensive sometimes in the financial services industry. I mean, I think that's where maybe NerdWallet can uniquely help and really get out there organically. And then I do think that once we reach, the treasurers or the CFOs, they do need to get approval, and the board, and you just discussed with, is this money safe? Are these rates reasonably competitive? Will we be able to access these funds in an emergency? If so, what might the costs be? And then, get it through board approval and make those deposits. So I think those are all things that are, things that just require education and outreach. Yeah, I mean, does that make sense? Or are there similar challenges to think about on, the 350 member institutions and the feet on the street?
Yeah, I think that's exactly right. I think there's a lot of folks who probably don't realize that they could be making these deposits and that they are fully insured by the federal government. And I know sometimes when we're engaging with investors, and we're in this back and forth around trying to, help them get through the process of approvals internally, just to sort of, get their internal folks kind of signed off on doing a deposit, that sometimes like a light bulb moment will happen, and we'll say, remember, this is a fully insured deposit. So, all the underwriting that you think you need to do on this investment, yes, you want to make sure you're underwriting us and you're underwriting the institutions on the ground for your own reputation risk and your own credibility. And, we can tell you, you also want to make sure that these funds are going out and having impact. And we can tell some great impact stories. But as far as like digging in on the financials of each institution that you're going to be making these deposits in, they're regulated financial institutions. They're examined every year by federal examiners whose sole job it is to assure and certify the safety and soundness of these institutions. So in some ways, with the deposits, you get the federal government not only insuring it, but doing your underwriting for you in terms of validating the financials of the institution.
I gotta say, when we shared it internally and with our board, there was just such incredible excitement and energy and just joy that we were doing this. It was quite the reaction, and I think that there's a real hunger for this across America right now.
Oh, I'm so glad to hear that. And it couldn't be more needed because, I do know there is just such a need. I think this past year has been a real awakening. But we also know the crisis is deepening, the racial wealth gap is widening. We have a lot of work to do. And the idea that through actions like these, we can start redirecting flows of capital out to communities that haven't really had it. I think those are some important steps in the right direction.
Yeah, indeed.
NerdWallet's really been such a pioneer, and I really, as I had said to you before, I've been such a fan of your work and of NerdWallet for such a long time. And you've really been such a pioneer kind of pushing the conversation around transparency in the financial services industry. And really, I think just even in your story of, telling how you got it started, that's really driving consumer empowerment. How do you think that you can kind of leverage that or, continue to use, I guess, that position in your sort of special sauce to keep driving this conversation and this work broadly around financial inclusion and racial equity in our country?
Yeah, to me, democratization is going to involve really leveling the playing field. I think if you're well off, you can afford to hire great financial advisors and tax advisors, and they can make sure you don't make any unforced errors with your financial life, right? I also think that that's something that should be quite simple for technology to achieve. It doesn't, all the technology is there. I think if we can get to a point where consumers or, maybe in our case, corporate treasurers can sign up for an account, share some information, and then we can use, simple heuristics and machine learning to really know exactly when to nudge people to make smart money decisions, like, hey, it's time to refi, or hey, your neighbor's doing this and they're saving money relative to you, or gosh, it's you should really look at this particular tax thing right now based on what we know about you. If we can accomplish that, then I think it will feel like we're watching people's back. They don't have to think about it. They avoid unforced errors. My observation is that sometimes the most difficult thing is not knowing what you don't know. So you don't know when to go ask a question. You don't even know to think about, a certain way to save for your child's education, or to, take advantage of a certain federal program that you should really take advantage of. So how do we bridge that lack of knowing what you don't know? So I think that's where it comes to sign up, and we'll nudge you when you should make a smart money move.
And it can be like a real paralysis sometimes when, especially I think in your finances, because on the one hand, even those of us who are in this work and doing this work, I just always feel like I'm confronting questions, in my own personal life that that I haven't confronted before, like thinking about, as you talked earlier about, like life insurance, and realizing like, oh, well, those are benefits that you often get through your employer, but those are not portable. And, how should I think about getting my life insurance so that I have it, all the time? Or, just things that, and so often you can kind of feel like, oh, I really should have known this. And so I should have done my research before. It's just so nice to know there's a place to go where you can get that information, and that you can feel like you can ask the questions that maybe we don't feel so comfortable sharing because somehow we think it's going to reveal that we don't know as much as we should.
Right. Yeah. I mean, I think the truth is there's just too much detailing complexity for any individual to realistically go out there and learn everything they should know. So people just learn through making mistakes or through happenstance by talking to a friend who happens to be going through the same thing. I mean, financial advisors really just are helpful in that they see so many people in similar situations that there's pattern recognition. So when you sign up and if you have means and you go find that financial advisor, they say, I've seen people like you should think about A, B, and C, right? So what is that for, the 99% as opposed to just those who are well off? I mean, that's really what we want to democratize. And I think there's an opportunity there.
It's so important as you get, for folks who are dealing with income volatility, uncertainty in their income, in their employment, or very, very tight margins. Those are the places I think where the trial and error learning can really be harmful, right? So trying to find ways to help them also be able to access good information is just really so important, right?
Yeah, absolutely.
We recently Inclusive did a lot of work with our members around redesigning a digital banking app for credit unions, and we wanted to sort of initially, I think when we were thinking about doing this, a new digital banking that was sort of targeted specifically for lower income individuals and families. We were at first trying to think of like, what are all the features that could be in a mobile banking app, that's never been done before, specific for folks who are, of limited means. And one of the things that we realized as we went through our research, and we worked with a really great group that walked us through sort of a human-centered design process to really dig deep on sort of, what are some of the obstacles for lower income, members at credit unions to even adopting new technologies or using the existing mobile banking app. And I think one of the big aha moments that we found was not so much that people needed new innovative features. It was more that the information that's prioritized in a lot of mobile banking apps is prioritized towards higher income consumers. And so things that were buried, they were there, but they were buried, were things like how to see your pending transactions easily, right? Because you make a lot of decisions being able to look at how much money do I actually have in my account. And if you're not seeing pending transactions, people were finding they could really get into trouble. And so they weren't trusting the information they were seeing in the banking apps. And so, just being able to prioritize things like that made it really clear. Here's how much, here's your balance, here's your pending transaction, here's how it's going to work. I think we ended up, the credit unions, as they were adopting it, found that they were doubling and quadrupling the number of users on their platforms as a result.
Oh yeah, that's powerful. Yeah.
Yeah. And it goes to the same thing that you guys do, which is like, how do we get that relevant information to people who need it most?
That's right. Absolutely.
If we had to think about, but both like Inclusive and throughout our, network of 355 community-based lenders out there, if we sort of had to, wanted to think about like how we could provide you all with, the necessary information and tools, both to help keep you driving this conversation, both for consumers and investors, what would be some things that we should be sharing with you, do you think?
Yeah, maybe where we're holding hands is, it's, matching up capital with areas of opportunity. I mean, if there's particular regions of the country, for example, where, there's especially high ROI for getting more capital in, I mean, we could definitely target companies who want to invest locally from those areas, right? So yeah, I think that's where communication between the two of us could, drive a lot more impact.
That's a really great point. And I think, when I look at across our network of members, there are certain marketplaces, New York, California, Chicago, that are, that have high concentrations of banks. And as a result, and because of the Community Reinvestment Act and other, other tools, the credit unions have access to deposits and, in social and investors like, from the national banks,
Right.
or maybe their community of investors is particularly strong. But then there's, so many of our members that are serving, rural Mississippi, northern New Mexico, native communities, huge swaths of the middle of the country where, both financial institutions are sparse and there's not a very strong investor community. So really being able to think through how can we kind of not just redirect capital into the movement, but how we can kind of help the flows of capital be a bit evened out for some of those communities that, have historically been left behind.
Oh, that's a great point. Are I mean, just so for my understanding, are the national banks just less likely to serve areas with less density or less deposit scale? I mean, is that where the real opportunity is?
Yeah, because the Community Reinvestment Act, which was like, it was originally passed by Congress in like 1977, and it was like last updated, in the 1990s. They've been trying to update it, although there were some pretty damaging proposals from the prior administration. But, the Community Reinvestment Act has always sort of operated as it places obligations on banks for them to reinvest within their footprint. And so if a bank's footprint is concentrated in a certain area, they have obligations to lend and to invest and to support, if they can't do it directly, they'll support CDFIs to do it on their behalf, but they're only limited, they're only required to do that within their footprint. And so many of the national banks, their footprint is really their branch networks. And so those branch networks tend to be concentrated in urban areas. The banking industry went through a large consolidation in which they closed, unprofitable branches. And those tended to be the branches that were probably serving, rural communities, or, they were in communities where they weren't doing a lot of lending. A lot of branches were closed in Black and brown communities because they weren't lending to begin with. And so when they were looking down the ledgers of where the unprofitable branches were, it's the branches that weren't doing very much lending. And so it really kind of pulled a lot of that footprint away from some of the communities that needed it most. So I think that's driven it a lot. But I also think, a lot of our investment really does come from, local philanthropy who, they want to do something back in their communities. So if they're philanthropists who are based in Silicon Valley or in New York City, they look around and say, I want my money around, to do good work here. I think platforms like yours, and maybe through this partnership, we can help everybody kind of think of their community in an expanded way. And I do think the conversations we've been having, in the last year are really around sort of some of our national kind of reckoning around race and injustice. I think it's maybe helped us see our community a bit more expanded from our immediate backyard.
Makes a ton of sense.
Yeah. So hopefully this will give that opportunity, right? That's kind of what we want to do with this great partnership.
Yeah, that's right. Let's make this happen.
All right. So let me ask you one final question, Tim. If you were to sort of, 10 years from now, if you were to look back and say, like, the one thing that you hope this partnership that, and the work that we're doing together has accomplished, what might that be?
Yeah, I guess I hope to see a world where corporate treasurers have clarity on how their money is making a social impact or not making a social impact so that they can make informed decisions around where to deposit. And hopefully as a result, um, we see a very thriving network of, um, 355, maybe 600 institutions who are, putting money to work in very impactful ways for their communities.
That's a beautiful vision for sure. And if we can make it easy for them to do, right? Make that
Right.
decision, be able to place that money within within a 24-hour period, right?
Yeah, that's right.
That is a wonderful vision. Well, thank you so much for this partnership, for this vision that you have, for all the great work that you're doing, and for having this conversation with me today.
Yeah, you as well. This really is something where we both bring something unique and very complementary. So I'm incredibly excited to see this forward.
Me too.
Uh,
Thank you.
okay, all right.